Hey guys, UC here. It's Sunday morning, and I think some of you wanted me to cover some of these chart patterns and sort of candlesticks, formations, what you guys can look for in an active trading day to kind of read the price action, generally speaking, right? So I think the best way to do it is through an example, a few examples, and then just kind of go over a few more things. So let's say, I think, where was that? The market chat. So the good example is, I think Sean also pointed this out. Looking for some of the alerts during the weeks, played out exactly as predicted. Okay, and bearish engulfing candle. Okay, so let's go to this particular one, right? So Amazon, I posted this chart, and the idea behind this trade was to probably next 30-minute bar see a dump down. So this is a 30-minute bar of Amazon, right? And we had this opening 30-minute bullish bar, but there was no bullish follow through above 31.92, and we saw a rejection and a 30-minute bar almost getting close to the bottom of this sort of channel, right? This upside channel, right, that we have. So this was also a key level, 31.64. So normally when this thing kind of happens in the morning, when you have a big failure like that, where the bulls cannot take it back up above the recent highs, in this case it was 31.92 as well. So that means that it's weak, right? So I wrote probability the next 30-minute bar sees a dump down. Now how you could have seen the price structure, now let's get into that, right? But just keep in mind, this was the channel. It was a good setup because it would have been a failure and a breakout out of this channel. This is a bearish setup in itself. We have a morning move where the price couldn't get back above the recent highs, which was 31.92. Now let's get into Thinkorswim, and I'll bring the 30-minute chart right here, right? So this is a 30-minute chart, right? And now I have in the middle a 15-minute view, and on the right side here I have the 5-minute chart, right, of the same time period. So now let's focus on these candles. Okay, so let me zoom in to a 30-minute chart, right? So this is a 30-minute chart. This is the same structure, this one right here, which I posted on the Discord, right? So that this 30-minute bar should see a dump down, right? That was the comment, right, where we were seeing a failure here at 31.92. So now if I drill down and show you the same thing right here, is a 15-minute view, right? And this is a 5-minute view of the same two bars. Okay, so now let's see, this is a 10 o'clock bar, right? So that means this would have ended, this bar, the last bar where I posted that comment, this bar right here would have ended at 10:30, right? So we wanted to see if the dump would come after the close of this bar, right? So over here we have the same bar, 10:30 time periods closing right around 31.65 right here, right? And then in the 5-minute time frame we have the same one closing right here. Okay, so how do you trade it? How do you read the price action, right? So you formed an opinion, yes, I want to see a dump down after this 30-minute bar closes, right? So here is the structure in 15-minute. You can see top wicks, lower high right here, right? So that's where it would have ended, the 10:30 bar in the 15-minute time frame, right? And in a 5-minute one right here, you can see sort of the this lower highs, and any green big bar does not see any bullish follow through, right? So that's an indication that anytime we see buyers come through, sellers take over, right? No bullish follow through to any bar, right? And this should have been your entry right there. Usually I like to see the next bar. When the next bar opens up, I like to see it go back up and then fail, and then I short it on the way down, right? That's gives you more higher confidence level, right? So which would have played exactly like right here, you see all these 5-minute bars, right? Top wicks, and this is exactly the bar, the 1035 one, right? You can see the 1035 bar right here. The time frame is on the lower side, 1035. So what you would have done, 1030 bar closed right here. This is a 1035 bar in a 5-minute time frame. It went up and it couldn't do it, and then it just kind of slammed down, right? That's where you short right here, right? You feel that this is the failure, right? And then it just kind of made some bear flags right here and just kept on going down. So that's how you could read the price structure in multiple time frames at the same time, looking at the price, what it's doing, and then take the trade, right? But you form a bias looking at a slightly higher time frame, which was this 30-minute time frame, and then that's what I posted, and that's what I saw when I wrote, on the Discord, that the next 30-minute bar sees it dump down probably, right? So that's what was going through my mind when I was reading that and sharing with you, right? So given you can short the stock, you can play in the money put option, you can play slightly out of the money put option, but I don't advise going far out of the money, right? Because it does not move that much, and you keep on holding for it to see a big dump down, which in case happen. But usually if you're looking for a small move down, in this case the price was around 31.65, 60, so 31.50, 31.30, 31.40p should have been a good choice, because it would give you a good delta for the move down, right? So that's how you read the price. Okay, so here's a Tesla 5-minute chart, right? Already covered in my weekly video that it still remains in the downtrend, and it's not seeing any significant buying pressure here because of the way these red bars are showing up, right? So anyways, but the point right now is not to analyze the chart, but just to kind of help you read the price action, identify sort of bearish patterns, right? So since the higher time frame was bearish, so I usually am only going to play the bearish setups. I ignore the bullish setups, or if I do trade them, it would be for a very short span of time. It would be quick. It would be a scalp, because I want to stay with the trend, and the trend is down. So I ignore the setups that come up for the bullish side, or at least just not play them for a longer period of time. I would get in, get out quickly, depending on which key level it is and stuff like that. In a downtrend, usually I do not play bull flags, things like that, because those are bullish continuation patterns, right? So since the higher time frame is down, you want to be playing bearish looking patterns, right? Which you already know, or can look on the Google and see what kind of patterns those are. But usually we see these ascending wedge, descending wedge, bear flag, bull flag, inverted head and shoulders, so on and so forth, right? So here's the chart of Tesla, and on I believe Thursday, right? So if I drill down to, let's say, I am in 2-minute, let's say a 2-minute chart. Okay, let's go back a little bit. So right here, right? So of course you can see it in multiple time frames, right? But if you're scalping or if you're day trading, it's always good to have a lower time frame, like 2-minute or 5-minute view in front of you, right? So right now what you can see that was happening is that it lost all of this upside move, right? And then when it broke sort of this mini up channel, intraday up channel, right? So that's where you start looking for a bearish move, right? And it was, again, this is sort of a bear flaggish move. This bar right here does not see any significant upside follow through, right? This one right here, really weak follow through, and then bears take over. This one attempted, rejected, right? And that's how it is showing up, and that's where you kind of go short, right? A lot of people like to go short on the breakout. I usually personally take a chance shorting it on the the top end of the flag, which is like here. I would short right here, because if it has to fail, and this is my stop loss, right? My stop loss would be small, my risk would be small, versus if I short somewhere towards the low end where it's a breakout trade right over here, at this time you would get the put premium to be it's going to be inflated a bit, right? A lot of people would be buying it at market price because trying to buy it at a limit price, you might not get a fill depending on how fast the market is moving. So if you get lucky, yeah, sure, you get a market fill and then you can just kind of cover right here. But from chart perspective, right, this is a breakout trade, and what if it fails? Then the chart will remain bearish until the price gets above this. But this means your risk has increased this much, right? Because the chart can easily go up and then fail and form a lower high or something like that, and then give you that move or flush down that you were looking for initially, but you start getting jitters. So just from personal perspective, personal trading perspective, of course it's a preference, you can do whatever you want, but that's the way I trade because I like to manage my risk, and that's how. So now one more thing I want to highlight is that here's the chart, right? So here's what you are seeing on that day, a move down, and now okay, God, I want to clear that up. Okay, so now you can see here's the one that we just kind of covered, right? You can say could be another one, right? But the thing is, this is number one, right? This is number two, and now if it's playing out this one right here, it did not give you that big number three did not give you that big of a follow through to the downside, because this is like the third time it is showing that bear flag pattern in the small period of time, right? Within like 30 minutes, right? So the chances are this will fail, right? This is the third time it's doing it in the recent history here in this one leg down. This is the third time in a lower time frame it's doing that. So if you're entering here, your stop loss should be pretty tight, or you should just probably ignore, right? Because this is the third time it's doing that in this leg down, so the chances are it will fail, right? Of course, it did end up going back down, but it would have stopped you out if you were using the top end of this flag as a stop loss, and which exactly what it did, right? So think on those lines as well, that you're trying to squeeze something out of the leg third time. This should not be your first trade. Basically, that's what I'm trying to say. This should not be your first trade. If this is your first trade, this should be your second or third trade, and or you should be trimming here if you're still riding your initial short towards the downside, right? And then intraday we had this nice sort of ascending wedge, I think, and it broke down, not that day, but the next morning it just kind of broke down, right? But again, something that you can keep an eye on, something similar. But it doesn't really matter what the pattern is, what you call it. In the end, what matters is how you read the price action. What do you consider it to be bearish? How do you read into the chart, whether there are more buyers, there are more sellers, things of that nature. That will pay you. For example, a lot of these things, if I go in so this is a course, right? And if I think some of you did reach out, that the one that you thought really helped you out was where did it go? This one, right? The Hikake based trading setup, right? And that one, I'll just share this quickly with you. So that one is similar to what I just showed you in terms of the Amazon trade, right? Move down, this is bear flaggish right here, but in terms of the setup itself, what's going on is that we have this move down, we have the inside bar, we got the breakout bar, right? Because it broke above its recent structure, right? Over here, inside bar, so it's a breakout bar, right? Because it got out and above the high of previous bar. And then you have the breakout failure, which is right here, and that's where you take the short, right? Sort of a breakout short to the downside. But that's the kind of setups and stuff that you have in the master action, this master trading course, which some of you have gone through and found it helpful. But it's always good to review these things, once in a while, just to kind of refresh your memory and just, helps you navigate the markets better. So next week now, let's see on a higher time frame, if I take this out, just, kind of something that we can read now as together as a group, what's going on. So the way I read it, this one is we have this sort of a, move trend down, and then we have this horizontal price structure right here, right? So something like this, right? Lower highs, right, in the shorter time frame, with 1079 as being the resistance. Okay, we have a little bit of gap here. So now, and we have the price holding this level 1021, and then we have a gap fill below this. So now on Monday or Tuesday, whenever this plays out, depending on how volatile the market is, probably Monday, we'll see if the price can get it back above the gap high, or if it can get back above this mini, triangle, descending triangle, if you want to call it, and then if it further breaks down, right, that would be a good setup where you see the price sort of jump and then fail, and then that, boom, it goes down. So I would like to see if I can short here, at the gap fill level, if it gives me a short against the high of 1079, and then, because again, risk, this is my risk versus this risk, right, where I have to absorb this risk as well, because this chart remains bearish below 1079. So think risk, and then I can trade the breakdown from 1021. So that's how you kind of combine the risk, the price structure, the intraday bars in the multi time frames sort of analysis that you can do, right? And I have these templates, for example, I can quickly, so if I'm looking at Amazon, again, I can just say, okay, show me 30, 15, 5. So it kind of quickly shows me multi time frame in a quick way, and I can just kind of zoom in and see what's going on in different time frames. This ones that I like to see in, right? And then see if I identify any pattern, if I identify weakness, things of that nature. So on Friday, you can see here is Amazon, right? Again, on Friday, it's pretty good setup. Look at this one, right? Look at this one. We had this move. Oops, sorry. We had this move to the upside. No. So it was sort of again, higher lows, but no higher highs. In fact, this was a barrier on Friday, 31.35, right? So that meant anytime we have a breakdown of this structure, you're going to get this move down, right? It was, pretty setup, right? Usually, if it breaks out above that, I would not have taken the upside trade, right? Because I was looking for a short move, so I would have ignored it. But I would have traded a short where if it had gone up and failed with a top wick, I would have shorted right here, because my risk would have been low, and I would have this move to the downside. So that's how you kind of plan your trade, read the price structure, and I think it will help you. There's a lot of more content on the internet that you can browse for free. But if you have any specific questions or things of that nature, please reach out. Okay, thank you.